Hi and welcome to Swissquote's Daily Market Talk. It's Tuesday, June 10th. All eyes are on the US and China trade talks in London. There is hope for progress. Risk appetite is strong this morning. The US dollar is up while safe havens are down. So we will talk about all that and more. But before we do, please keep in mind that opinions are my own and this is not financial advice. So the week started pretty flat in the US and with some weakness in Europe where many were off due to a religious holiday on Monday. But futures are in the positive this morning at the time I'm talking here as everyone is coming back and the news are not too bad because one of the major catalysts of the optimism that we see this morning is regarding the trade talks between the US and China because the first day of the second round of trade negotiations between the US and China went relatively well, according to the latest reports. There hasn't been a major breakthrough, and Donald Trump said that it's not easy to talk with China, and the London talks will continue today. But there are rumors out there that the US is ready to make some concessions on its technology exports toward China in exchange for relaxed exports of rare earth metals towards US. So when asked, rare earth and strategic metals ETF was up by another 2.80% on Monday, while Hong Kong's Hang Seng Index is preparing to test its March peak levels and could extend gains in case of good news on the trade front from London today. Now note that the Hang Seng Index is still trading with a 22% discount compared to the 2021 peak and with 27% discount compared to its 2018 all-time high level. So there is room here for further gains in case of supportive news from London, of course. Now in the energy space, the trade optimism also helps US crude clear a critical Fibonacci support this morning. The barrel of US crude is slowly drilling above that $65.35 per barrel mark, which is the major 38.2% Fibonacci retracement on the year-to-date decline. A sustainable rise above this level will signal the beginning of a medium-term bullish consolidation for crude oil and along with an improved trade narrative be supportive of further gains toward the $68 per barrel mark. But there's always this risk that the higher supply from OPEC countries, for example, catches up and limits the rally into the $67 to $70 per barrel range. In contrast, your typical safe haven assets, including gold and Swiss franc, are softer this morning, while the US dollar is better bid in Asia. The euro dollar is pushed below the 114 mark yet again. The dollar yen shortly traded above the 145 mark psychological level, while the trade and China sensitive Aussie consolidates its gains above the 65 cents mark against the US dollar. Any progress on the trade talks front should further fuel the risk on trades later today and in the coming days, whereas any disappointment, God forbid, would send fresh shockwaves across the global financial markets. Now on the data front, we have quite calm day in the US before the all-important CPI release due Wednesday. The light economic calendar of today will likely keep investors focused on trade talks, so we will continue to follow the headlines very, very closely today. Now note that promising trade news could even temper the potential negativeness that we could see in tomorrow's inflation figures from the US that are expected to signal mounting price pressures for the US, mind you, partly due to the rising tariff costs. So the US 2-year yield consolidates near the 4% mark this morning into tomorrow's inflation data, while the US 30-year yield is softer into Thursday's closely watched 30-year bond auction in the US, with a near 5% yield on the 30-year papers for the USC. Demand from investors is yet to be seen, as many bond investors across the globe have been shifting toward shorter term maturity papers on the back of rising budget uncertainties for the US and its unsustainable debt levels. So a soft auction this Thursday could send the long-term borrowing costs soaring again and eventually bring investor attention back to the exploding US debt levels. If that's the case, we could see demand for alternatives return despite the positive trade news. So gold is obviously one of the alternatives to US papers, but demand for precious metals started going beyond gold since a couple of days now. In fact, the latest rally in silver and platinum prices is quite impressive. Platinum prices are up by 15% since the beginning of the month of June and more than 30% since April. Now, gold's rally is certainly one of the major catalysts that boosts investment demand in sister precious metals like silver and platinum. So the platinum ETFs have actually seen a 300% surge year over year in investment demand in the first quarter of this year, and it's not a coincidence. But there's more to platinum's story than just increased appetite from investors for precious metals, because supply in platinum remains tight and the market is expected to be in deficit for the second year in a row. And the World's Platinum Council actually predicts that the deficit of this year could reach almost 1 million ounces. So that's quite a big gap. As such, the borrowing cost for the metal surged past 13%. So this cost is normally sitting near zero to tell you the tight market conditions. Meanwhile, demand is mounting steadily, especially from the hybrid car makers that use metal in catalytic converters. Then, on the other side, jewelry demand for platinum is also said to be rising as jewelers around the world shift away from the expensive gold towards alternatives. So price-wise, platinum trades almost 50% lower compared to its 2008 peak and looks promising for investors who are willing to diversify away from the gold that has become just too expensive. In the equity space, Apple revealed a new operating system interface called Liquid Glass yesterday in its Worldwide Developers Conference. It just holds annually, and the company mostly focused on design and aesthetics instead of technology and AI, in yet another strong sign or a strong warning that the company is falling well behind the AI race. So far, investors have been quite okayish or gave the company some breathing room as they consider the company being a luxury brand as well. So it could somehow compensate for its AI lag, but the consistent lack of progress on the technology, especially the AI front, could eventually and severely cost Apple its place among the technology leaders and eventually encourage its investors to shift away from Apple towards alternatives. So from a stock price perspective, we already see that Apple has been diverging negatively from the rest of the Magnificent Seven stocks. And you know what? The world has already seen technology darlings like Kodak or Nokia, for example, left out of the frame. So Apple is not there just yet happily, but the company must do something, especially for its AI, to stay in that top 7. Elsewhere in technology, well, TSMC just announced its May sales figures this morning, and its sales grew by a strong 39.6% year over year. The stock price is pushing higher this morning on the news in Taiwan and could give a fresh boost to Nvidia as well at the open today, along with that hope that the United States could eventually relax some export rules toward China that could also benefit Nvidia's Chinese business. Because remember, the company Nvidia even had to stop its exports of the chips that it particularly designed for China last month. So good news from that front cannot come soon enough. So all eyes are in London, but this is all for today. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, on LinkedIn, but also on WhatsApp, Threads, Telegram, and Blue Sky for regular market updates. Subscribe to our YouTube channel for daily market comments, and please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow, and until then, good day trading.